Hey, how's it going, everybody? Welcome to Swing Trade Newsletter. Anmol here. Let's get started. So we are in the home stretch, last month of this year of 2020, and we're now finally going to start 2021. Can't wait, right? But 2020 has been a pretty good year for trading overall. Day trading, I would say, has been a little bit slower compared to, let's say, the previous year. We were averaging anywhere from 200. Like I personally, for me, I was averaging 200 to 250 R units a year. When it comes to day trading, this year looks a little bit lower. I think probably going to end up making 170 Rs for day trading. Swing trading, however, has been pretty good. So last year, obviously, I could not do the newsletter. Last year, Jared was doing the newsletter because I was busy, managing some other projects and managing money for some people. So which was a conflict of interest at that point. So I couldn't do the newsletter last year. Jared did it. I wish I could do it yet. I wish I could have done it last year because I would have given you similar returns than what we got this year. But this year I'm doing the newsletter and I will continue to do it. Going forward, I've done the newsletter for the last 5 years. Since Live Traders and then previously for other firms as well. And I've pretty much crushed it every single year. Never really had a bad year swing trading, and I'm excited for 2021. 2020 has been pretty good. Right now we're up about 63%, assuming you're risking 2% per trade. So if you're risking 2% per trade as your R unit, you're up 63% for the year, and hopefully we can close the year on a good note. My goal is, if I can get another 7-8% this month, that would be awesome. That'll push us to 70% for the year. But if not, then I want to maintain and stay around that range. So that's why you would have noticed that basically every single trade I've called in the newsletter, pretty much every single trade has ended up working and has gone much, much higher than where we called it. But perhaps I wasn't able to capture a lot of that move. Maybe I got out too early. Maybe I raised my stop loss too tight. They triggered and then, took us out and then ended up working. But that's also because you have to understand and put yourself in a position of a fund manager where you're up most fund managers who ended up 10% for the year. This actually stopped trading, right? Because average return of the S&P is about 6 to 8%. Now obviously it's been crazy last 3-4 years, but most hedge fund managers actually stopped trading when they're up like 10-12%. So for me, we were up 60-65%. So I've been a little bit cautious. I've been a little bit more conservative going to the last month of the year because nothing worse than taking a bunch of trades going into the last month of the year and giving back your returns. So that's why I've been really tight with my stop losses and raising my stop losses really quickly because I am in profit protecting mode. The good news, however, is that on 1st January, as I've talked about, on 1st January, we are going to have a brand new spreadsheet. By brand new, I don't mean anything fancy. It's just the same spreadsheet, but it's going to start from fresh, right? So we're going to lock the spreadsheet. It's going to move into our archives, and then we're going to have a spreadsheet that's going to start from blank with no trades, inputted it. And for any trade we call starting 1st January, we'll be tracked on the new spreadsheet. So we can build the return up again and see how we do in 2021. So that's my goal here. And again, we crushed it. I think last year when Jerry was doing the newsletter, we ended up making, I think 30-something%. This year, we pretty much doubled that already, right? Double the return of last year. And I want to continue to do that for you, in the following years. So let's get started. Where's the market? Market is dyslexic. Market is, market is just crazy, like market doesn't want to listen to what's really going on. And that's why I sometimes I laugh at fundamental traders, right? Because fundamental traders job losses, small businesses are suffering, dollars collapsing. Oh my God, market's going to come in. And I'm like, maybe, but markets can stay irrational longer than you can stay solvent, right? You guys understand that, right? So markets will stay irrational longer than you can stay insolvent. So yes, you're right. Market actually doesn't care, right? Let me look at them. Look at the world. The world's in lockdown. Travel sector is hurting. Companies are laying off people left and right. Big corporations are laying off people. Small businesses are suffering. But the stock market is all-time high. And the reason for that basically is small businesses are suffering, yes. But actually big businesses are profiting, which is kind of ironic how politicians even allowed to do that. Because think about it. Your average Best Buy store is open. Your average Lowe's is open, right? Walmart is open. You can buy anything you want online from Amazon. All the big box stores are open. You go to airports are open, right? However, a restaurant, a small business cannot be open. So again, I don't want to get into political discussion, but I think you guys can understand the hypocrisy and the irony of how they've done it, right? So if you're a small business that maybe small restaurant that maybe sits, 15 people, 30 people, you are a threat to the to the world because of coronavirus. So you cannot operate. But if you're an airport, yeah, sure. Like, people can fly all around, flights are open, people are traveling. You could go into your Walmart, buy anything you want. You can go into like a Lowe's, a Home Depot, buy whatever you want. Everything is open, and there's like hundreds of people there. There's massive queues of people. Parking lots are full, jam packed of people. That is not a threat. That is not a threat to public safety, but gym with maybe 50 people is. A small restaurant with 30 people is. A small deli, which has maybe at 10 people at most at one time. That is a threat to economy. So that's kind of ironic how the politicians done it. It's crazy, and small businesses are suffering, but the stock market doesn't care. Well, why? Because stock market has big box stocks, right? Stock market has big cap stocks like Home Depot, Lowe's, Boeing, right? So airports and all the big companies, they are fine. Amazon is crushing it. Amazon's happy everybody's at home because everybody's buying stuff on Amazon. So you can see here how the technology stocks and small, these big online retailers have done really, really well. Big corporations have done really, really well, but the average person is getting killed. But the stock market doesn't care about the average person, right? Because stock market only has stocks in it, which is big companies, not small companies. So that's the whole reason behind stock market going higher. Markets are definitely extended, and decline is definitely on the cards. But it's just like you wanna still keep trading on the long side, and when the market does finally give us a pattern, then we could look on the short side. I personally think that maybe next week we're gonna get some sort of a pullback. I might be completely wrong. But I think that maybe next week we're going to get some sort of a pullback. Now, that pullback's not going to be like, oh, crash. No, it might just be a pullback to the 9 EMA, right? Which is around like 365, 364. So I do think a pullback probably next week is on the cards. But we'll see what happens here. Markets continue to rally up. We have broken this trend line that is on the weekly chart, completely broken it. So that trend line is irrelevant at the moment. And, it's just weird markets we're trading in. So let's kind of go over our open trades here. We are in only one open position at this time, which is LOW, Lowe's Companies. So Lowe's, the reason I shorted that is because, again, stock market is going to the highs, making all-time highs. Lowe's is not making all-time. Lowe's is actually downtrending. And then Lowe's obviously had a uptrend line over here, right? You can draw that uptrend line there, right? Uptrend line was broken. Moving averages crisscrossed each other. Stock was above the moving averages. Now stock is below moving averages, and the moving averages are crisscrossing below. 9 EMA used to be above, now it's below, and all the moving averages that were below are now above. So it's it's a little bit trend change, and we are getting a series of lower highs and lower lows. No pun intended, right? Lower highs and lower lows on lows. That's funny. I know my jokes are pretty immature. I know that. So lower high, lower low, lower high, lower low. Lower high, right? Lower low here, then we got a lower low, and then we got a lower high here. So we got like a little sell setup, right? So I shorted it basically right over there, put my stop loss over here, and Lowe's is looking pretty good, closed red, and hopefully this thing can continue down and go into the 200 period moving average, and that will be the target area on Lowe's if it can go down over there. So I'm currently in this. Our original stop loss was quite high, above like 160. Now I'm lowering my stop loss to like 156.78. That basically cuts our risk by more than half on this trade. So looking at the weekly chart, same thing. Looks like if it can take this 149 area out, I think Lowe's does look like it wants to go down to 130, 135. So this is the open position that we're in. This is the only short trade we are in. Let's dive in straight into some of the brand new trades I've called, which is quite a lot of them in this newsletter. Just keep in mind that not all of them are going to trigger, but you want to place your orders for all of them. But again, not all of them are going to trigger, and some of them are never going to trigger, and we're going to cancel them. And also, when I notice that, okay, these are the new trades, right? So when I notice that, hey, bunch of these trades are triggering. Let's say we wake up and, oh my God, 4 or 5 of them triggered. Yeah, then you're going to see an email from me saying, cancel, let's cancel the rest of them. Because I don't want to take all of them. This is too much risk. I don't want to take like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, like 12, right? I don't want to take all these positions. Absolutely not. I want to take maybe 4 or 5 of these, right? So if you notice on Monday that, hey, 4 or 5 of them just triggered, then you're probably going to get an email from me saying, you know what, let's cancel the rest. Because again, I don't want more than 5, 6 positions at any given time open. right? That's kind of my max that I want to go by, especially at the end of the year. So let's kind of dive in and take a look at what we got going on here. First trade of the day here of this week is NXTC. NextCure, biotech kind of a stock, has been getting killed and then completely going sideways, phase one sideways trend, and looks like it wants to maybe transition into a phase two uptrend. I'm looking to buy this above this topping tail with a stop right below it and hoping it can transition to the upside. So that is one trade I'm looking at. Next one, which is my favorite out of all of the ones that I'm calling today, is BLU, Bellus Health. So you will notice actually you know what, a lot of the stocks that I'm calling in this newsletter are healthcare stocks or biotech stocks. So again, they all again look similar. Phase one sideways trend recently got a pop here, going sideways over there. Looks like it wants to continue higher. So I'm gonna look to buy it above this base with a stop right below it and look for a move up higher on BLU. Next one is a stock that is very familiar to all of us, STSA. We traded this stock a while ago, and we were in it for like 5,000 years, you know. And then we, you know, popped up a little bit. We got out, but it's still looking good here. I think it might want to pop one of these days higher. So we're gonna look to get back in this with new numbers. Next one is HTBX. Again, something you're familiar with, called previously in the newsletter. It never triggered. I canceled it, looking to call it back up again. If it comes back and takes out like a $1.20 area, $1.19 area, stop below $1, looks like it might want to get a pop over here. Another one that I previously called in the newsletter but canceled was DGLY. Looking to buy this thing above like 270 with a stop below, like 215 area, and look for a move higher on DGLY. And then we have VCNX, again, another biotech kind of a stock, going sideways, but now the moving averages are, price is starting to get above that. So I want to look to buy this above like, 230 area and look to see if it can get a pop higher. Next one I have on the list is another familiar face, AEMD. Again, another medical stock, looking to buy it above, $2 with a stop loss under like $1.60, looking for a pop to the upside. So again, a lot of these are healthcare, biotech stocks. So that's why I'm saying I don't want to jump in on all of them. First 4, 5, 6 trades that trigger, we'll take them. And then if I notice that, okay, wow, everything is triggering, then yeah, we're just going to take the top 5, 6 and cancel the rest. Again, you're going to get an email or text message from me, so don't worry about that. Okay, next one is BVXV. Again, another stock that got killed, going sideways. Looks like it wants to transition to the upside. Another stock is Genus, GNUS, which was a super strong stock, a few months ago. Dead sideways since like many months. So I think if it can break above the sideways pattern, it might get into one of those nice pop big days. So looking to buy that as well. Again, numbers on all these trades, entries, stop loss, target, they're all going to be in the newsletter. So, make sure you look at that. All right, next one, we got ASMB Biosciences. Surprise! It's another stock I'm looking to buy above these highs as a opening, as like a range breakout. With a stop below here, looking for a move to the upside. Okay, CSPR was a trade we were in the newsletter. I shorted this thing right over there. Stop loss was above there, and it looked pretty good. Came right back down, but then the market's so strong that this short trade actually just popped up. So we got out of this for a small loss last newsletter. BCLI is another one we got out for a small profit. It's actually much higher right now, but that's I'm in profit protecting mode. I already talked about that. All right, now last 2 trades, we got CTRM, penny stock. So again, if you don't like trading penny stocks, you don't have to trade this one, okay? So I know some people are not comfortable with trading penny stocks. They don't like trading penny stocks. If you're not comfortable, please do not trade them. I'm trading it because, as you guys know, I do not care if a stock is a penny stock. I don't care if it's $1 million stock. I don't care if it's $1,000 stock. I don't care if it's a $10 stock. I don't care if it's a $50 stock. I don't care if it's 5-cent stock. You know what I mean? Because for me, I trade patterns. That's pretty much it. So a lot of people say, oh, Anmol, wow, isn't that risky? Well, no, because how is it risky? If you have a stop loss in the system, you're going to get stopped out when it hits the stop loss. So you're going to end up losing 1R. So if you lose 1R on a stock that is $50, it's the same if you lose a 1R on a penny stock. If you lose 1R on a penny stock, it's the same as losing 1R on something like $1,000 stock, right? 1R is 1R loss. So this is a trade I'm looking to trade as well, CTRM. Reason for this one, again, going sideways, looks like it wants to pop higher. Beautiful, nice volume spike on Friday. So something happened on this on Friday. I'm looking to see if there's continuation, look to buy that and take it into the 200 MA around like 40 cents. Okay. Last but not the least, ONEM, healthcare stock, surprise. So healthcare stock, ONEM, has this little base over here at 36.20. Can get above that base. I think it might want to move to the upside. So calling this one as well. And honestly, like, I won't lie to you, I actually had a bunch more trades that I was going to call this newsletter, but staying with risk management, like, there's some that I do like, I'll mention for you. Here's some ideas that I'm watching. OUNE, if it gets above like 650, I like this long. KODK, if it gets above like 850, I like this long. COGT, if it gets above like $14, I like this long. Right? Okay, these are just ideas. The official trades I already mentioned, those will be in the newsletter. These are some ideas, some additional stuff that I'm watching. ADTX, if it gets above like 225, I'm watching this one. SSNT, if it gets above like 350, I'm watching that one. JFU, if it gets above $2, I'm watching this one. ATXI, watching that above 350. MEIP, watching this one above 310. So again, these are some more trades that I'm personally watching, but I just don't want to call all of them right now. But yeah, it's possible that maybe next week some of these get canceled, they don't trigger. Then yeah, I might, and these start looking good, then I might call them. But the goal is to not have more than 5-6 positions at a time. Okay, so that's kind of the newsletter for today. Let's kind of jump in and quickly take a look at the market internals and see what they are telling us about the stock market. Are the stock markets neutral still, which means more upside? Because if you remember last newsletter, we talked about it and we looked at the market internals. Remember last week's newsletter, we talked about market internals. We were like, man, market's moving higher, internals are neutral. That means more upside is possible on the market. We talked about it on this day, that more upside is possible on the market. And look at that, markets went higher, and then the neutral turned into the overbought territory. Now, here's the thing. Even though the market internals are now close to 100, right, which means you are in that overbought territory, you're not really overbought. Because you can see the real overbought for the market is usually around 150 to 200. Or like at 130, 140. So until the market internals get over to their resistance levels over here, markets might actually have more upside. So keep that in mind when it comes to the market. Let's take a look at the QQQ NASDAQ. So NASDAQ has also made a all-time high. Same thing here. Internals suggest that maybe there's a little bit more upside to go before we can get a pullback. So it's possible that Monday, Tuesday market goes up, and then maybe we can get a pullback around Thursday, Friday time on the markets. Let's take a look at oil here. A lot of people have been asking me about oil. I personally am not a huge fan of trading oil because look at this. It's been like dead sideways for like many months. But if you do want to trade it, I will say it needs to get above like $32 on the USO. If it can get above 32 on the USO, then sure, maybe you can give it a try. But right now, not a huge fan of oil personally. Talking about US dollar, US dollar continues to slide lower. We talked about that as well. That this is our support area on the USO. UUP dollar, US dollar breaks that, we're going to go lower. And why did the market go higher? Well, market went higher because the dollar went lower. And again, that's inverse relationship. So when the dollar goes lower, stock market goes higher and vice versa. You can see that. Why has the stock market been going up? Well, dollar's been going down. Why? And well, why is the dollar related to the market? Well, because when there's a cheaper dollar, it makes it easy for foreign investors outside the US, let's say Russians, Indians, Chinese people, right? Russians, Indian, and Chinese people, they buy a lot of the US stock market. You're looking at an Indian right now. So, when the dollar gets cheaper, it's easier for foreign investors, right? Because they can convert the currency cheaper. And so it makes it better, more appealing for them to invest in the stock market in the US. So that's why when the dollar is cheaper, stock market goes higher and vice versa. So that's one of the things you need to keep in mind. And again, gold is surprisingly, gold and dollar have an inverse relationship as well. But recently they've both just been sideways. And the reason for that obviously is, gold is pretty much already trading at pretty extreme levels, Talking about Bitcoin, BTC USD, Bitcoin is obviously continuing to make highs here. I remember back in, right over here in like December of 2017, I published a research report on Bitcoin, and I talked about like Bitcoin was at like 19,000 something, 19,400, and I published a research report. I'm like, this thing is gonna drop like a rock, probably to like 5,000. I was wrong because it didn't drop to 5,000, actually dropped to 3,000. So I was right on that, but I'm actually surprised it came all the way back up. Came super all the way back up, which is crazy on the Bitcoin. And the reason for that is, I just don't like Bitcoin personally. I will say this, like, trade it, don't date it, right? So Bitcoin is not an investment. Bitcoin is a speculative instrument. So if you want to speculate, great, go ahead and do that. Nothing wrong with it. If you want to trade it, like you say, hey, Anmo, Bitcoin is a breakout over here. I am going to buy this breakout. That's awesome. I love it, right? Trade it. Don't date it. Buy that breakout. Take profits, right? That's what you want to do. Trade Bitcoin if you want. Don't invest in it. It's not an investable instrument, just because it's speculative in nature, right? People talk about, like, this is what people say when they try and pitch Bitcoin. Bitcoin was at 3,000. If you just bought it like last year, now it's at 20,000. Well, yeah. What if you bought it over here at 19,000? You're basically back to break even after 3 years. Right? What if you bought it over here? You had to live through this decline. So it's too much of a gyrations for me. I personally will not invest in Bitcoin ever. I just don't believe in it, just because. And people always say, Anmo, but the U.S. economy, the dollar is going to crash. The dollar is not going to be a currency anymore. And then Bitcoin is going to be the one. Well, here's the thing. It doesn't make any sense, because you are attributing the value of the Bitcoin to the U.S. dollar, right? You're saying one Bitcoin equals $20,000. Well, if you're saying dollar crashes and there is no value in the dollar, then what value does Bitcoin have? Think a little bit, right? Because the value of Bitcoin is only the value against the dollar. So if there is no dollar, there is no value for Bitcoin. This is what people don't understand. But anyway, I don't want to get into that discussion. Hopefully today's newsletter makes sense. And let's end the year on a good note, everybody. And I'll see you in the next edition of the newsletter.